Welcome to readtheticker.com. Here you see the S&P 500 ETF SPY trading for the last month. I'll just go to the 10-day chart on the big charts, and you can see, as you'd expect, post-Christmas, pre-New Year activity is pretty much dried up. But what is very interesting is that not all of the pits are quiet. I type in the ETF for GLD, and you see here gold was dragged down, or the ETF was dragged down, and you have this massive volume on this base pattern. This was yesterday. So it's not been quiet in the gold market. Someone has been loading up a lot of GLD, paper gold. Obviously it spiked up here, somebody else saw that. It was dragged down, massive volume, lower price. So somebody likes the prospects of gold early on in 2015. Why would they do that? Let's have a look. Here we have the DXY long-term chart. As you can see, we have coming to a long-term channel at 95. That's massive resistance. Also, we put our little bands in here. As you can see, between 90 and 95, we've got some rather large challenges coming up with the US dollar. Got all these resistance points here. Now, what normally happens with larger resistance price, people start taking profits from their accumulation at 90. It's gone up 10 handles, and you can bet your bottom dollar there's going to be some profit taking up here. A bit more of a closer chart here, where you can sort of see once again the strong resistance coming up with the US dollar between 90 and 95. The straight line we've seen from the US dollar from the accumulation up here, very handsome profits. We'll most likely see some, some activity in the US dollar up and down as it approaches resistance. Now, I do know that the US dollar is going up hard as a sort of a reverse action on the crude oil market. So if crude oil continues to fall, the US dollar will continue to strengthen, but I believe it won't be such in a straight line. Here you're looking at the monthly GLD chart. You can see here that we've had a consolidation, tight demand line here at 115, and then prices were sold down, the bust stops, but getting a bounce back above the demand line or support line. One important point to note is that when US dollar rallied from 80 to 90, the relative strength winner was gold. So if you go to the main blog, you'll see posts of the nature of gold is not hurt by extreme moves in the US dollar. Well, you can actually sort of see no one's really sold down gold that hard as compared to the big move down here. So what we actually have here between this swing and this swing here is here's a thrust down of price action, another thrust down which is shortened, didn't gain the same trench, and here's another thrust down which is not so great. So we have shortening of the thrust down. So unless this does it like an ABC, it may have already done an ABC, or goes down again to test it. The relative strength against US dollar is strong. I would like to see the price break above 120 and hold to confirm that the demand has come back into the gold market. Until then, I would say this is a potential recovery, and we could potentially get a sign of strength from the 110 mark to the 125, 130 mark to show that the gold bulls are back in place. I use the word potential because we must have a sign of evidence that a change of behaviour is about to happen and that the buyers are going to come strong back into this market. Thanks for watching.